Hello everyone, today is Tuesday, July 28th, 2020. My name is Evan and welcome back to another midweek market recap video. So we're going to jump right in here to our market technicals dashboard. You can see stocks closed the session here in the red right across the board. All of the major indices fell today by about 1%. It was a pretty even race to the downside. Qs lagged just a little bit, played a little more of that underperformance game. Otherwise, everything was pretty much down. 5-day change numbers still in firmly negative territory. Take a look at the Qs here as well, down the greatest over the past 5 trading sessions. We talked about in our past market recap video the back-to-back down weeks for the Nasdaq. First time we've seen that since early March. It's a big week for the Nasdaq. In fact, Thursday is sort of the Super Bowl of all days. I think we have never seen so many of the mega cap heavyweights report on the same day, but I think we have probably half of the Nasdaq in terms of size reporting on Thursday of this week. So it should be quite interesting. We'll all have to prepare for that. If we look here and continue down our dashboard, we're below the 10 SMA across the board. We're above the 50 and 200 SMA across the board. If we look at sectors here, we've got real estate at the top of the list, followed by consumer staples and utilities. It's a little bit of a defensive tone there. And on the downside, we have energy, biotech, technology, the bottom 3 underperformers over the past 5 trading sessions. In terms of major markets, silver continues to make historic moves, frankly, to the upside, really just charging ahead, seeing more progress this week. Natural gas as well, and gold, all top 3. And on the downside, we have USO oil, we have S&P, and we have emerging markets. So let's jump into the charts now. Let's try and make some sense of the broader action here. We've got TC2000 open. We are looking at our equity market grid. We've got our smart trend filters applied, which are the colored dots, and the dashed white price there is price itself. The white dashed lines are price itself. So let's start it off with the top left here is the S&P 500. We're looking at a weekly time frame across the board, and to cut to the chase here, in all of these markets, there's basically been very little movement this week. Markets were down today. They were up yesterday. So if we look here at the SPY, it's up just slightly on the week. Nasdaq's up slightly on the week. IWM's up slightly on the week. ACWX up almost 1% on the week. But all of these markets are still in a bullish outlook here for our smart trend filters on this time frame. So there's been no change. Prices above the trend filter. We've got green dots being printed here. The Nasdaq continues to have the steepest slope. So in other words, the most strength has been backed into the Nasdaq here, but see prices quite extended away from the smart trend filter on the weekly chart. So really no change to speak of when we look at this weekly chart. If we get onto the daily picture, we've got a little more turbulence. The S&P 500, top left, you can see on a daily time frame, still printing bullish trend here, but it is much closer to the trend line, and it is more kind of sideways here in terms of price over this recent trading history. So trading around 32.20s, that's where price has been here. We're starting to pull back a little bit, so be interesting to see if we get some type of test or transition here into the neutral state later this week. The top right, the Nasdaq, you can see on the daily chart, we are getting some turbulence here. We are in the neutral, sideways, choppy state. Lots of ways to basically think about it, but essentially it means that we have kind of two-way trading and a little bit of volatility or mixed signals going on here in the short term for the NDX. And of course, again, with Thursday's lineup coming at us in 2 days, we'll want to certainly keep an eye on what this turns out to, or what this ends up resolving as. In the past year, over the past 3 months, all of the tests of the trend have been great buying opportunities. That obviously does not mean that this one has to be the same, but we can at least look at past rallies here over the past 3.5, 4 months, and you can see that every time price got down here and stalled, it's been basically a launch pad for higher prices. Notice we are spending a little bit more time than past occurrences here at these levels. So be interesting to watch in the top right. Bottom left is the IWM. You can see getting pretty gradual here, but still printing a bullish trend. So we want to keep a close eye on this as well for the Russell 2000. It broke out to the upside, got the transition up 2 weeks ago, and you can see it's trying to hold on to it right now. And in the bottom right, ACWX, these are international stocks, so basically international markets minus the United States. You can see still faring pretty well. Nice green print here, doing well this week on a relative basis as well. So life looks pretty good here for international markets right now. So let's take a look at some of the price action of these markets before we take a look at something else. If we look here at the S&P 500, this has basically been the roadmap that we've been looking at here. We've been talking about, if you've been following these past handful of videos, frankly, since the beginning of June, we've had the same kind of grid and layout on the charts here with these same horizontal levels. And again, you can see with the S&P 500, you might even have a little bit of a kind of a topping pattern here being developed, but this 32.35, this is where we broke out from just over a week ago. Remember, the S&P got this move above this level here, which represented the June highs for this market. We spent 2 days, really, I guess 3 days above here, and then we broke down and we're kind of just trading flatline into or against or at this resistance area or this influential area, acting as a bit of a magnet right here. So for the S&P 500, going to be very interesting again for the next 2 days here. A lot of earnings coming up to see how we finish out the week here. Can we reclaim momentum? Can the bulls get the momentum back on their side and get a move back over 32.35? Or are we going to roll back over, come back down to this old range and retest this 31.30, 31.40 area where support was demonstrated in early July? That is the question. That's what we're paying attention to. And these, frankly, are the relevant roadmaps, supply and demand, and resistance areas that I'd be paying attention to. So for the S&P 500, same levels. Let's see how it shakes out for the rest of this week. If we look at the Russell 2000, again, you can see very clearly here with no lines drawn or no markup on this chart. You can just see how sideways the Russell 2000 has been over the past, call it 10 trading sessions, 9-10 trading sessions. It's essentially traded in a sideways range around 146, 147. Had a couple of attempts to kind of break out to the upside, but still mostly sideways here. And if we were to throw on sort of our roadmap here, we've been using this 144.50 to 145 area. Again, that was the breakout from July the 15th. And we really just haven't been able to add a whole lot of strength or separation between this breakout level. So we now need to sort of pay attention here as we've got a good amount of compression going on, how this range ends up resolving itself. Back down here, falls into this old range, and we open up risk down to about 133.50. On the upside, 152 to call it 153 and change would be the highs there from June. Last but not least, if we look at the Nasdaq 100, we've got our range carved out here for the past 2.5 weeks now. We've been trading basically sideways in between this 252, call it to 268 zone. This is about a 6.5% range from low to high. And if we kind of take a step back here, you can see, let's clean up this chart just for a clear vision. You can see that life has been good here and has been rewarding the patient NASDAQ holders or the patient NASDAQ bulls to the upside. It's been our market leader. It's outperforming all other averages here in the U.S. on the year. And if we zoom in and just take a look here at the price action a little bit closer, you can see we're spending kind of the longest period in a real sort of true sideways fashion. We did have, this zone in here, which we sort of recently resolved back at the end of June. This lasted about 2 weeks. You can see we're a little bit longer now, longer in the tooth in terms of this range. And once again, we're waiting to see how this ends up resolving itself in the coming days. So let's pay attention to this. This obviously is going to be the big story when we do our weekend recap, is to just see how the market handles the onslaught of earnings on Thursday and how the Nasdaq resolves this area. So far, support is holding around 252 or so. We'll see how long that can last. So that, I think, covers all of the major markets. Let's jump into a couple of others here. We're not going to talk about credit on the top of the screen. We'll look at VIX here in the bottom left. You can see still on a sell signal on the weekly time frame. TLT in the bottom right, so long bond here, still in a rip-roaring uptrend as well. So basically, right alongside of equity markets, bond markets have been rallying, basically step for step, continue to be up this week. If we go down to a daily chart, for the VIX here, you can see back into a sell signal as well. Bottom right, TLT, strong buy signal, getting some separation above our smart trend filter. So TLT really still continuing to work in this environment. Now, if we switch over to this grid here, we look at commodities. I mean, gold and silver, top left, top right. These are the stories here. Gold breaking out to all-time highs, or getting back to all-time closing highs for GLD. You're going to go back to 2011 since that last happened. So this was basically a 9-year recovery back to its all-time high prices. You can see great amount of separation here in the short term. So gold is quite extended, quite frothy here in the short term. If you've been watching these videos, I don't think, again, this should be that much of a surprise. On the weekly time frame, you can see we've basically had a buy signal since early April in GLD, and for most of this year, frankly, it's been in a buy signal with just a little bit of kind of turbulence here right at the start of the year, and then a little bit in March. So GLD looking pretty good. Silver is the more sort of second half story here, because silver, if you recall, did get beaten up quite a bit here in the first 3 months of the year. It had that very steep sell-off where it fell 33% in about a month and a half's time. But boy, did that really wash out a lot of sentiment, because it has come back extraordinarily strong. In fact, breaking records at the speed at which silver has been rallying and moving to the upside. It's up almost 95, almost 100% since the lows in March. And we're talking about a commodity. We're talking about silver, not $100 million tech stock. So in about 4 months, this is almost doubled off of the lows. Take a look at where price is. Take a look at where our trend filter is. It is very extended and very frothy here in the short term. I don't necessarily know that that's enough of a reason to short it in itself, but I think it does sort of speak to the ground that it's covered, and kind of the open range risk right now at just how how much movement this is covering on a day-to-day basis. So very impressive move in both of the metals here, and silver especially. Bottom left, USO, no change here, still in a bear trend on the weekly time frame. Daily chart, you can see that's changed, and that has been a different reading here since May of this year. And DBC commodities still acting pretty well overall as well. So a couple of things I also want to talk about, which we, I think, have touched on a few times here, which shouldn't be a new surprise. It's not a cutting edge thing, but the US dollar here continues to essentially fall off a cliff. It's sort of trying to stabilize a bit now. You could partly say this is why we've effectively seen gold and silver take off with such momentum to the upside, along with some other things going on. But with commodities denominated in US dollars, we see the US dollar falling, and that, generally speaking, is going to support commodity prices. And not universally and not always, but that's generally the principle that you would see. And the US dollar here has really fallen off a cliff. So I at least just wanted to point that picture out in terms of what's going on in that respect. And then I also wanted to just bring up the chart of silver here and just show it, from this perspective here, you can see just again how much this has really sort of escaped gravity here. It is broken above. Let's go back to a weekly time frame to see this a little bit better. I mean, you can see that silver here is essentially gone nowhere for the past 4 years. So for a lot of reasons, you could say this is due, and that there's been a tremendous amount of supply, and that we finally just essentially got a breakout here that started. You could argue that over this $18 to $19 zone, this was the kind of bottom end of the range here in 13 and 14. It's been about the top band here for the past 5 years, and we're starting to get that breakout over this very long sideways consolidation. So that's sort of the bigger picture there in SLV. Of course, as we talked about, extended, basically very extended on all metrics that you want to throw on this, but certainly looks like potentially a big regime trend change going on here for a longer term perspective in SLV. So that is it. That is the midweek video for Tuesday. Again, Thursday's your big earnings day, so let's pay attention to that. Of course, we are in earnings season, so if you're trading other individual stocks, if you're holding stocks, double check your dates and make sure you know when you're going to have that company report, so you don't wake up to a big surprise in the morning. And I think that's all I got. So thanks as always for tuning in and watching. Every Tuesday we do the midweek videos like this. Wednesday, tomorrow, trade ideas. And Friday we do our long form market recap. Should be a juicy one this week. Thanks so much as always for tuning in and watching. You can subscribe on YouTube or follow us at The Trade Risk. Have a great rest of your day.